All right, let's get right into it. Today, we're looking at Strive Asset Management, ticker ASST. And this one is a real head-scratcher. It's a classic technical puzzle. On one hand, you've got some exciting signs of life, but on the other, there are some really serious warning flags flying. So the big question is, are we looking at a comeback story, or is this thing about to collapse? That's what we're here to figure out. And this is what kicked everything off. This is the number that really got our attention. A single-day jump of over 4%. Now on its own, that's pretty good, right? But believe me, it's the stuff happening around this number that turns a good day into a genuine mystery. And this is where the plot thickens. You've got this one good day. It's like a single bright spot. But then you pull back the camera and whoa, the bigger picture is pretty grim. The stock is hanging out near its lowest point in an entire year. So what's real here? The little green shoot or the barren landscape all around it? So that's the million-dollar question, isn't it? Was that little jump just a fluke? A dead cat bounce before it falls even further? Or is it the start of something real? The beginning of a genuine turnaround? To get to the bottom of it, we got to start following the clues. All right, so first things first, in any investigation like this, you follow the money. We need to look at the trading volume and figure out if that price jump had any real muscle behind it. Were people putting their money where their mouth is, or was it all just noise? And boom, right away we hit on our first big clue. This wasn't a quiet little price bump. No way. The volume absolutely surged. We're talking more than double the daily average. So that tells us people were definitely paying attention. Big money was moving. But which way was it going? Well, it looks like the clues are all pointing in the same direction. Somebody was buying. A lot. You look at the on-balance volume, which basically tracks buying pressure over time. It's high. That suggests the long-term players are getting in. Then you've got the accumulation/distribution line, which is positive, meaning buyers were in control that day. And, like we said, the volume was double the average. You add all that up, and it really starts to look like some smart money is quietly scooping up shares. Okay, so the money trail is pretty clear. Buyers are showing up to the party. That's a big piece of the puzzle. But it brings up the next obvious question, right? Is there enough buying power here to really push the price up? And if so, how fast and how far are we talking? So let's switch gears and pull out our next set of tools. We need to look at momentum. Think of it like the stock speedometer. We know it just sped up, but does it have the horsepower to keep climbing, or is it about to run out of gas? And right off the bat, we see something that should make the bulls pretty happy. The current price is actually breaking through its recent ceilings. It's now above its 5, 10, and 20-day moving averages. Basically, it's smashing through the resistance that's been holding it back lately. That is a textbook sign that momentum is building. And it's not just one thing either. It's like all the signals are flashing green at once. You've got the stochastic and Williams R indicators both screaming buy. The CCI, which is great for spotting new trends, is signaling a strong buy. And then there's the MACD, the big one for trend strength. It's showing that this move up is actually getting stronger. I mean, you look at all this, and the short-term case looks incredibly bullish. So to sum it all up, the analysis gives the stock a really solid technical score. I mean, based on the volume, the momentum, everything we've looked at so far, you'd think this is a slam dunk. Case closed, it's a comeback. But this is where the story gets complicated. Every stock has a backstory, and you have to look at the whole story to really understand what's going on. And with this one, man, when you zoom out from all this short-term excitement, the long-term picture is, well, it's pretty troubling. Just look at this. It really puts things in perspective. The price today is about $150. But the 200-day moving average, that's the big one for the long-term trend. It's over $3. Think about that. Even with this recent jump, the stock is worth less than half of its average price for the year. That's not just a dip, that's a massive hole. So to really grasp how out of whack this is, we need to talk about something called linear regression. Now, don't let the name scare you. All it is a tool that draws a straight line to show you the stock's main long-term trend, kind of like its center of gravity over time. And this might be the craziest number in this whole analysis. The stock is currently trading more than 113% above its own long-term trend line. Think about that. It's like a rubber band that's been stretched way, way too far from its anchor point. A move like that is almost never sustainable. It's a huge red flag for an overbought situation. And the warnings just keep coming. Other long-term indicators are also flashing red. You've got the TRIX and the MAMA/FAMA systems. Both are basically trend reversal alarms, and they're signaling a possible downtrend. That trend line we were just talking about, yeah, its slope is pointing sharply down. And maybe worst of all, the risk-reward ratio is really low, which basically says the potential gain here just doesn't justify the risk you'd be taking. So, what in the world do we do with all this? We've got a mountain of evidence saying buy for the short term, and another mountain of evidence saying danger ahead for the long term. This is where we have to step back, weigh all these conflicting clues, and try to map out what could happen next. And this really shows you the tug of war that's going on. In one corner, you've got all that positive volume and strong short-term momentum pulling up. But in the other corner, you have the massive weight of the long-term downtrend and those huge overbought warnings pulling it back down. This isn't a one-way street. It's an absolute battleground. So, on this battleground, where are the front lines? Well, it all comes down to these key price levels. The bulls have to break through the ceiling at 158. The bears are trying to smash through the floor at 137. And right in the middle, you've got the pivot point at 144. That's the tipping point. Whichever way it breaks from there could decide the whole fight. So with those battle lines drawn, the analysis boils down to a few possible scenarios. You've got the bullish path, where it breaks through that resistance, the bearish path, where it fails and falls back, a sideways slog, where it just gets stuck trading in a tight range. And then there's the wild card, a huge breakout on massive volume. The bottom line is, nothing is set in stone just yet. And that brings us to the final verdict from the analysis. And it's pretty clear. You have to be cautious here. Yeah, the short-term action is exciting, but that brutal long-term downtrend, the terrible risk-reward numbers, and that crazy overstretched price, you just can't ignore it. The weight of all that negative evidence is just too much. So we're left right back where we started, staring at this enigma. When all the technical signals give you a clear yes and a clear no at the exact same time, what does an investor even do with that? Maybe the biggest takeaway here isn't about finding the right answer. Maybe it's about seeing the conflict itself as the most important signal of all, a clear sign of major uncertainty.